Okay, boys and girls, I'm going to go back to the Answers Hub Trading Clinic, and I've had a question from Chris on the Discord regards trailing stops. Now, this is an interesting subject because there's no right or wrong way to do this, but there are little hacks that you can do. Now, it comes back to my favourite quote: know thyself. Are you nervous? Are you patient? All these sort of different things. So let's see if we can put a couple of things together. Actually, I'm going to have a slurp because we all know Scruffy likes it coffee. And we'll check this out. So, scenario is gold. Now, gold is pretty darn quick. So one thing you don't want to do is ratchet it so tight to a candle that it's just going to whip you out, because it will spike up and down pretty viciously. Now, what I'm assuming is you've done your trade and you want to leave a little sliver left, because that was kind of the gist of the message. You've taken the bulk off and then you want to trail a little bit and it stops you out. Okay, so first thing is this. Once it's a decent distance away from the current price or your entry price, get your stop to break even. All right. Once it's at break even, leave it there. So what's the next hack you can do if you're just going to leave it? Are you going to watch it, or are you going to target it? Well, you can do a bit of both. But if you're going to target it, you need to put something that's relevant. So, very easy way to do this is work out what the ATR is. Now, there's a number of ATRs you can use. If you're looking at it all day, put a day ATR in. What's that? Well, it could be 150 pips. You've already got 40 of them and you're expecting it to move up. So what you would do is this. You would look to see where the day candle started. So we'll say it was sort of 12 at night. Okay. And it's got a 200 ATR. Okay. So there's your starting point at midnight. Draw a line 200 and a line 200. That's as far as it's going to go within a day if it never looked back from the point of entry. So if you're entering a trade around here, well, and it's long, you want to target there. Let it get on with it. But leave your stop at break even. Now there's another way of doing it. You might want to time it. Timed trail. Now a timed trail is slightly different. Still look at your ATR. So we'll have another method, which is time. Leave the stop where it is, don't ratchet it, and think, I want this to be done at the end of the current session. So if you're in the London session, 4:30. If you're in the New York session, 9 o'clock. If you're doing through the Asian session, 6 o'clock in the morning. You're letting it run to the end of the session. So we'll just assume that it's London. You run it to 4:30 p.m. and then just close. That's it. Just close it off at that point and take whatever profit there is. So if you've looked at an ATR, so you can have just an upper target for it to run to. You've looked at time, where it's just the end of the session. You can also look at target. So you can put a wide TP in of 100 pips. Let it get on with it. Nothing wrong with doing that either. But what if you want to watch it? Because those are all great if you just want to walk away. And they're actually the better of the ones. There's actually a fourth one. We'll drop that one in as well. A fifth one rather, which is an auto trail. Now an auto trail, a lot of the brokers allow you to do this. you put a predetermined amount of steps in. So if you think it can run maybe it's 150 or keep on going, well, you put a target in of 50. Why 50? It's roughly about an ATR, you know, like a 4-hour ATR, you know, because you want to step up one from your anchor. So you can put an auto in of say 50 pips. That will definitely keep you out of the noise. And what it'll do is it'll go there, move 50 pips, and your stop will pull up to there. Moves another 50 pips, and the stop will pull up to there. So it'll ratchet behind. Okay. Now you can do bits of both. You can put a ratchet on and then look at it at 4:30 and close it off. Now, if you're watching it all day, this is where you get stopped out. This is where things get a bit naughty. So take these away. And why is that? Very simple. You put them stops in way too tight. So, you know what your hourly candle is. That is the bare minimum to trail a stop. All right. On gold, because the thing is wild. All right. If you're on a slower market, sort of say euro dollar, bare minimum is 15 minutes. But you don't want to be trailing on a 5 minute. 5 minute is too noisy, and a minute, suicide. Right? You want to be about an hour, and it's very simple. You trail only in the direction you're going, and you stop when it reverses. So you'll have a candle moving up, like so. So your stop starts there. So it has to come down to take it out of the stop. This candle closes, it's the same direction, goes there. But then you can have another candle which opens heading to the stop. Don't move the stop. Do not trail that candle. Next candle comes in, closes in the direction you're going, because I'm assuming this is long, by the way, guys. You move your stop, you miss that one out, and you put it there. And then eventually what will happen is a candle will come down and take you out. But you've got to give it time to breathe. You've got to let it move. You've got to let it operate. Hourlies. If you think that it's a vicious market, 4 hourly. Okay. Now the other way of doing it is this. Again, there's arguments to say that the stop should be trailed behind a 12 moving average. Fine, on the right time frame. So if you're trading 5 minutes and you're watching the chart work its way up, do not trail a 5 minute chart. Step it back 2. So down through a 15 minute, down into 1 hour, which is your anchor. Then look at your moving average. Now there's a number you can use. Now if you want to be relatively quick and you want to hug the price, it's brilliant if you can see the market trending. But the market doesn't trend that much. You've got to let the thing breathe a little bit. So a 20 is good. And all you would do is you would just follow the moving average till the price comes through it and stops you out. That's simple. You can even use a Bollinger Band. Bollinger Bands are brilliant. And you can watch the Bollinger Band go like that. You've got the moving average running through the middle. That'll sort out your trailing stop for you. Nice and simple. There's other ways of doing it as well. You can go, right, well, I only want to really watch your 5 minute candle. Don't really want to do anything else. Put your fast RSI on, and as soon as that gets up onto the top section, you pull your stop underneath the hourly candle let the thing relax, and if it relaxes down, brilliant. Let it go back up, right? It's overbought again, right? Move your stop up again, and you keep doing it that way. That's a little bit more complicated, but the easier ways to do it are set a big target, set a time target, or follow candles 2 time frames up. So if you're on a 15-minute, look at a 4-hour. You're on a 5-minute, look at an hour. If you're on a minute, you want to be looking at 15 to 30 minutes. And these are the simplest ways to trail a stop. Now, there are other ways you can do it. Like on a daily sort of swing trade, you just follow the candles up. We do it with a weekly chart. But if you want the easiest way, 20 moving average on an hourly chart will sort you out. So I hope that helps. So as always guys, trade well, keep your risk managed, but above all, do what you love and the money will follow. See you all in the next one.